In this group of videos, we've been learning all about the financial statements. In our last video, we examined the balance sheet. In this video, we're going to learn about the income statement. To understand the income statement, you really need to understand two new terms. You'll need to understand revenues, and you'll need to understand expenses. So when I think about revenues, the one word that comes to mind is the word earned. Revenues are the company doing what it does to earn money. So when I think about a retailer, if I walk into a retailer like Walmart or big retailer, Amazon, some online seller, their primary revenue stream is from selling stuff, right? They sell stuff to us. That's what they do as a business. They buy stuff at one price from their supplier. They sell it for more money to you, the customer, and they generate sales revenues, right? That's a very common way companies earn money, is they sell stuff. But that's not the only way to earn money. There's plenty of other ways companies earn money. My dad, his whole career, he was a consultant. He had a consulting company. So he would have had consulting revenues. I just had my car into the shop and I had to have it repaired by a mechanic. Well, that mechanic had repair revenues because he was doing what he does to earn money. He was doing a car repair. So the company doing what it does to earn your money, that's a type of revenue. We have all sorts of other types of revenue. I could go on all day. The banks, they can earn interest revenue. When you have an interest cost, they have interest revenue. If you pay rent to your landlord has rent revenue or rental revenue. All sorts of revenues, right? Anything a company can do to earn money is considered a revenue. On the other side of the table, we have expenses. And when I think expenses, if I want to think one word that goes with expense, it's cost. It's the cost of doing business. It's the cost of earning that revenue. So I love my job as a university professor. I enjoy just about all aspects of the job. But if they don't pay me, guess what? I'm not going to do it anymore. So my university has to pay me. That's a cost for the university, right? It's a cost of the university doing business. So they have salaries expenses, right? They got to pay their employees, and any company with any amount of employees has to pay them. So that's a very common expense you see. In the case of my university, and think of your university, there's lights. Somebody turns on the lights and they have to pay a bill to turn on the lights. We call those utilities. There's a utilities expense, and you can think of things like internet or heating and all sorts of other costs of just keeping a business open. If your company sits on a big piece of land, you'll probably be paying property tax expense, or you might be paying the flip side of rent revenue. You might be paying rent rather than receiving it. You might have a rent expense. You can have repairs expenses, any cost for your company, and so that's the flip side of repair revenue. When I took my car into the shop, my mechanic had repair revenue. I had a repair expense, right? It's a cost to me. So just about any cost you can think of can be considered an expense. So again, revenues are the company doing what it does to earn money. Expenses are the cost. And you know what an income statement does? It tracks all these revenues, it tracks all these costs, and it says, hey, did we have more earnings than we did costs, or did we have more costs than we did earnings? And all you do at the end of the day on an income statement, you just summarize the revenues, you list them, you summarize the expenses, you list them too, and you take one minus the other. You say, okay, were my revenues bigger than my expenses or not? If they were bigger, you have net income. Your company was profitable. That should be two words. I know it's kind of jammed together. Or if you had a negative number there, if expenses exceeded your revenues, you'll have a net loss. What is going on with my computer? You'll have a net loss. Well, in most cases, you'll see net income. So let's look at a quick example. There's ABC Company's income statement for the year ended December 31st, 2017. And you can see there's revenues at the top of $100,000. We got expenses at the bottom, total expenses of 75. So we just take revenues minus our expenses and we get our profits, our net income of $25,000. So this company made $25,000. Again, I'd encourage you to look up a real company. Look up Nike, look up Microsoft, look up whatever company you're interested in, and you can see their income statement and you can see their revenues and expenses. Now, this is a real beginner's one. You can see there's only 3 expense categories. A real company will have lots of different categories, lots of subtotals in the middle there. But as a beginning point for understanding the income statement, you just need to understand that revenues are the earnings, expenses are the costs. Revenues minus the cost tells us whether the company was profitable, tells us whether the company made money in the previous year. Okay, hope this has been helpful to you. Bye for now.